Hey, everybody, welcome to July 30th, 2026 coaching call. We are going to take a look at the markets. Okay, so let me see if I'm sharing my screen. Yes, I am. See if trend lines change and adjust. If you compare what I've recently had on the channel, I've had a bear flag and a micro bull flag, and then I've had this sort of rising wedge here. Let's make it a little bit more clear. Let's just have one rising channel here. Okay. That's what this is sort of my rising wedge, or because even a bull flag and a bear market is a bearish thing. FYI. No, I don't have to short. So yeah, so as we're looking here at the daily, I just wanted to show you guys a couple things here. So the daily is going to help us from like basically a day-to-day perspective. We're going to look as a decode on multiple time frames. Okay, so let's start with the 3-day. Now the 3-day, a little bit zoomed out, we're looking for a confluence of signals for a turning point. So obviously we're in this rising wedge here. I had I'm going to go through all these different indicators, but the moving averages in the cloud for now that we're above on this 3-day chart. Let's just look at the relative strength indices. Let's just bring this up. Notice we are in the overbought above 80 zone, and we are starting to roll over bearish. That is when the orange goes over the blue. And let's just look in the past and see how well this signal has provided us with something. Goes sideways for a while, orange goes over blue, rolls over, and we get a huge dump once we're up above this 80 zone. Okay, we are above the 80 zone. Orange has gone over blue. It's gone sideways for some time, or we could start to dump. Let's go back up the next leg. This one was a good signal. This one up here comes up, hits the cloud, bear market. We are in the overbought category, indicating that this counter trend is going to fail. The orange goes over the blue, and we have a huge violent leg down. Just as a reminder, the second leg down of a bear market in every single bear market in Bitcoin's history has been extremely more violent than the first leg. And no one wants to really talk about that. That would bring Bitcoin down to a very insane level that no one thinks that we could get to, which we could. I mean, I'm open to the fact that this could be a smaller bear market. I mean, we have factually every single bull market in Bitcoin's history has been smaller percentage wise, every single one. And it will continue to do so, right? What Bitcoin hasn't done in its history is experienced sort of a Six Sigma, huge 10-year stock market type correction. That's what it hasn't experienced in its like what, 12, 14-year history, something like that. Very small level of data to get that type of thing. But it just as we go back in time, right here was this high, right? Orange over blue and the oversold. And every time we go up into this indicator here, you can just see it is a signal on this 3-day chart that works very well. And just keep in mind, in 2013, the bear market saw an 86% correction. Okay. In 2017, it saw an 84% correction. And in 2021, it saw a 78% correction. So even if it's a contracted correction, less than 78, we're still only around 52 or something percent. That still would take us to, at least between 35 and $40,000 for another violent leg down. So yeah, showing that RSI day 3-day chart, going over these what these percentages are, you can see how this has been a pretty good signal. Now, is this the signal that it fails? It could be. Who knows? That we're going day to day for the daily call in terms of our day trades. But I would say as it's been in the zone, it's been sideways ascending. It's been very difficult to trade that day to day because while we're in this channel day to day, there's this bigger picture flag. We're also in the context of a bear market if we zoom out. So while on this one it may be an oversold technically, which is why we got this bounce on the 3-day a little bit higher up, it's an overbought category, relative strength index, and that's what we're gauging underneath the price actions, whether the momentum is going to corroborate it. Okay, so like I said, what I am going to be automatic if we got to think in terms of if then corrections. Okay, as we're coming up with what our thesis is of what to do here, we're using a lot of data points on multiple time frames. Let's zoom out even more. Let's save and close this. Okay. We are getting ready, guys, to back test a very important 2018 trend line here. That's touch, 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 almost touch, and now we're back testing it here. Slight adjust. There we go. So whether we fail, see, that's just adding to that my thesis of that 69 to 70K zone. That would be an automatic short for me if it doesn't fail here already, because I showed you guys that we're in this sort of like week long head and shoulders pattern, which is making the rotation off the trend line very difficult for the bulls. I mean, it could fail here. I thought about shorting. There's the high of the day right now, but I didn't want to fade against the fact that the bulls were in control. And I was thinking, okay, it'll probably just go sideways for a while here. Maybe then I'll fade it if it continues to do that. It doesn't go up higher. I might short that in the overnight or in the morning, something like that, because we have to factor in who's in control of the day. Easy for a sec. So we have to, factor in who's in control of the day. And while it's not trending, the bulls are in control of the day. You notice that like I instantly went from like a very high time frame here to a lower time frame because I'm basically trading on multiple time frames. It is a top down multiple time frame approach. So we're keeping in mind that we've backtested. Now, why are these trend lines important? Well, look what happened here when we backtested this trend line. This was the 2020 COVID trend line. I'm basically creating the 2020 COVID trend line the same way that I'm creating the 2018 trend line. I'm taking the low of the 2018 bear market, this anomaly, which was almost a retest, and then I'm taking it to the 2022 lows and hitting the lows of that bear market and then bringing them up here, and we've broken them. See how when we back tested that, it brought us down here. We could, this one we've back tested, we didn't even get up there. It's close enough. Are we close enough? I don't know. We're in this uncertain zone, you know. Uh, so we're gonna get out of this. I'm just giving us different perspectives here. We looked at the daily, we looked at the 3 day so far, we looked at the weekly zoomed out to 2018 to look at trend line fanning because trend lines change and evolve over time, just like bigger picture patterns. The system is always balancing bigger picture patterns against horizontal support and resistance, against directional support and resistance, and against taking into consideration what phase of the market we're in. That's super important. We're in a bear market, right? Right. There's not really a signal to go short on the daily yet, right? You can see even with this inverse zero line reject, if you shorted the day of, you just sat sideways or just, indecisively and even had an overshoot. And it wasn't until the next day that you got the down move. That's what I'm betting, at least if I want to go short, if I see that here. This is an inverse zero line reject. This is potentially one we don't want to see the blue go over and over. They're not great ones, but they're there. And like I said, the 3 day is doing its thing. Now, one thing on the daily that's not good for the Bulls is the fact that the MACD has rolled over on the daily, not even the 3 day, because we've had this hidden bearish divergence, which kind of called that we would get a pullback at the top of this trend line here. right? Where we kind of push back there. Now we do have this touch point, touch point. I cloned that, touched that, and kind of put one here, which really isn't really a spot per se, but it shows that we're in this channel, right? And then that's sort of the uh, bear flag that we're in here. So I'm sorry, bull flag. I'm just looking how I've added the pink cloud to the daily. I it works really well on the weekly. We'll zoom out to that in a second here. I wanted to see how the MACD on that 3 day looks because the RSI is very good on the 3 day. Yeah, not really giving much of a signal. It's kind of rising with price here. So, but like I said, the RSI, that cross has been very good on these pop-ups. Very, so keep an eye on that. It could fail. No signal lasts forever. But we want to go with the odds, the highest odds signal. One thing that's been tough for traders is that in the summer, the range is really compressed. You see that you just this whole month of July, we've really had a significant decrease in the range from the highs to the lows, and that's typical, in the summer when the volume is down and there's less activity. AKA, who's really there to make it the final lows. So don't listen to anybody saying it's the final lows yet when there's no actual evidence of a final low. In fact, some signals have turned bearish. Like I said, I zoomed out to the 3 day. The RSI on the 3 day is very bearish. The RSI, the MACD on the daily is very bearish, but the MACD on the 3 day is not. See how they're mixed? The 3 day had this zero line reject, and it predicted that it would bounce off this trend line, and it did very nice. There is currently no signal on the 3 day one way or the other. The signal on the daily is that this is a poor man's inverse zero line reject, which means that it could just go up a little bit more to fail or fail here. It's not enough for me. I mean, I want to see a hook from extremes. Like this is when I gave a really good short signal when we had a very strong hook from extremes near the zero line. We were near the top of this trend line, which touch on this bull. And we had a lot of things going for us for the at least odds for a pullback. Okay. When you're drawing a bear flag, right, you want to clone the bottom and the top, and then ideally it should touch 3 times. And you can see this is a good representation of that. Touch, nearly touch, cheat a little bit, and make them all touch. And that's what I think we're building here. Now, on the previous chart, I did have that drawn. Let's see, where did I have this? Yeah, I wrote about this in the channel. Let me just find it here. See, yeah, basically the fact that we have patterns embedded within payout. Bulls need at least to close like this to have a short a shot at the retest. No, yeah. See, there's a purple rising wedge here. That was when I had this drawn that way. Within the context of the bear flag, which was this, is eerily similar to the previous 1 month ago. However, it's slowing this likely the bull flag. This is just ascending channel here. There's just seeing patterns within patterns. Of course, there is this head and shoulder, inverse head and shoulders, which everyone thinks we're going to get that extreme breakout. But we have a lot of other problems ahead, whether that happens or not. And even if we do, it's most likely to fail when it rolls over with this 100 moving average and we get a confluence with this trend line here. Keep in mind when that possibly gets up here, this could be rolling over more. And it could take us to that 69, 70, 68K, upper bounds of this blue to up here, area where there could be a shorting opportunity. That would be the higher odds move than to wait than to short here where it could overshoot. And even though your idea is right, it still needed time to mature, so on and so forth. Yeah, let me see if I might have misspoke because a bull flag in a bull market, right? It's making lower lows in the channel here. These have been bear flags in a bear market. This is a bull flag here in a bull market, and this is the micro bear flag. Either way, like I said, bull bear flag, la da da da. If it's happening in a bear market, every counter trend rally is going to fail. So whether, like I said, whether it fails here at this zone, whether I short here or not, take a loss and then short it again, or I be patient, I wait for my plan, which I keep stating publicly over and over again. We can all short it together for a while. Because then it's like, if you really stick to your plan, like, you know what, I would be proud to take a loss at 69.70K because, I waited for that great trade location, didn't get caught up on lower time frame ideas, didn't wait for anything too aggressive. Because, if you can, when you're in a trade and everything is lining up, and like when I gave this short signal to short the double top here at the 200 moving average, shorting the counter trend rally, having faith that this trend line now, even though it broke at this point in time, the trend line was like this. All right. And then a lot of moon boys were like, oh my God, we broke the trend line. Bull market's back on. No, no. Just look at how it's behaved every single time. Why are you constantly betting on an anomaly that hasn't happened yet? I'm not saying it can't, but don't bet on something on an anomaly which hasn't never occurred in its history without evidence of it first. Like at this point in time, like the pink cloud, right? Once we broke it, it was substantiating the counter trend rally. But when I was drawing this counter trend here and then comparing it to the length of this down and then showing you this other length and saying, hey, we are in a bear market, which one's bigger? It will reverse there. That's when I was confident that the hook from extremes, a lot of things to go short and go all in. Here, when you're in the middle of something, right? When you're in the middle of something, right? You still have this head and shoulders, but like you overshoot up here, and then you're still right. It's one of those things where it's just more of a risky idea because of it, because there's no evidence necessarily. We're in a sideways upper trend where it's mixed. Some signals are bearish, some signals are bullish. That's why we're going neutral, sideways for the last, since early July for the last month, sideways, kind of to up. But really, we're here now. We started there early in July. Oh, July 1st was around here. So yeah, we have gone side. We've gone up and then sideways. It's been a sideways up market. Where whether, like I said, whether it resolves itself here now to the downside or it goes up and tests the trend line and the weekly setup, which is, you know, and like I said, there's a hammer candle here. As long as it's staying above the 200, we don't break decisively below it. It's got to hold this because even though it overshot it, there was still a bottom. We're above it. If it closed this week, it's a hammer candle. But like I said, it is Thursday at 4:30. We are far from Sunday night. The idea is that if it comes up here and we have by the time it does come up here, this is going to roll over probably maybe a little bit. Let's say it's right actually where I said 69.6. So if it comes up around this level where these two are crossing, we can short that. That would be really good odds. They haven't really touched in a while. And notice, like I said, in a bear market, shorting the yellow, which is the 20 moving average. Look, remember when we had this bearish engulfing pattern and I counted the leg counts up and I said, hey guys, that's it. See you in 4 years, meaning we'll be back up here in 4 years. And no one wanted to hear that. That was like insane that I called that. Just guys, a small little channel like this called, not many people were calling it, especially not people they have on CNBC. It's like they hire these people to tell you the wrong thing so they have liquidity to sell into you. But once we had the most bearish day in history, I said, that's it, we're done. The pop up here now, because we were in a confirmed bear market, by the way, you should have sold here. Shame on you, triple top. You know, up into the 20 now is a shorting opportunity. Just memorize this. Every single time we hit the 20 moving average in a bear market, it is a shorting opportunity. Boom, shorting. And then now we have the cloud confirming it. Here with the selling tail, we didn't even get that. We couldn't get there. But see the cross? Holding below, holding below. Now, granted, here we did break it, but we held at the cloud. Okay. Bam. And now we're rolling over into it again. Right? Will we get there? Will we not? The lower time frames are really struggling even to get there. I mean, if I wasn't teaching right now, I've been thinking about shorting this all day. I'll just show you what I'm thinking about shorting. Right around, right at this zone here. I mean, it is a zone. I drew this zone a long time ago, guys, from 64778 to 651,123, shorting to the back of it with a stop maybe even beyond the next zone or into the zone. But you probably want to short up here more so than down here, kind of a thing. But I basically, once we held on this trend line, held on this trend line, held on this trend line, we didn't actually hold on the trend line until we got here. But now we're above it. Why can't we rotate up and test up here? Which would more up here by the time we get there is more like to that 69 area that I've been talking about. Now, I do remove my arrows from time to time because it just becomes too much. One time I had all my short signals that I gave, and this chart was literally littered with blue arrows. But so far, I've kept the last 4 trades, which were all winners, by the way. And you can see my trade frequency since mid-July 16th. I've only had 4 trades in 2 weeks. That's really great. I got to say, like, I'm obviously more comfortable in a bear market shorting. I should be comfortable in a counter trend also going long. I definitely all see the longs. It's just a psychological thing now to do both. I mean, double bottom, double bottom, double bottom. I mean, anything here. But whatever. I am giving the right trades at the right time. So we will be, like I said, going full size on the next major leg down, holding a larger position size down into it. And then when we get to the next when signals start to revert the other way and we get the violent move down, we will fade the next counter trend down. But we got it. Like I said, I thought it would hit the 300 first, but we didn't. If we zoom out to the weekly really quick, I don't know why I don't have a 300 on that one, but we'll go to the index. Maybe I have it there. Yeah. So I said yes. I said I was going to go full size on our portfolio reload if it started to touch penetrate around here, around 55, a little bit overshoot. And a little bit of a perfectionist. Once I saw the double bottom here, and even into the next day, we penetrated 58 to 57. That's pretty close to at that moment in time, it was around 54, 55. What I said, 55. It's like, how much more did you want? It would have been aggressive because it's ahead. But I said to myself, I say, man, if you're super patient and you wait too much, you might miss, might be a double bottom, you might miss it. There was something on the CCI that suggested the counter trend would start a little bit above it. Was that as we came, first of all, we went down 30%. You're going to get a bounce, okay? It's near this level for a wider double bottom, and then we had this double bottom, and as it was making this double bottom, the question was, is the next candle going to pop up a little bit, and then we go around and penetrate here? This CCI from here to here failed to make a new low. So that was a bullish divergence with the CCI on the weekly spanning 1, 2, 3, about a month. So that was also something I saw was psychological why I didn't want to. Should have took it, smash up, no excuse now, but that would have been on the long side for a way larger size. But up here we will short on the futures and we will try to ride this down where maybe we will get some kind of this 300 might still act as something that they could go sideways around for a larger counter trend, because if it does fail here, this was kind of a weak move. We didn't get quite this type of a move or even this type of a move. Now, if we go to the last bear market, 21, the highs of 22, there was some pretty violent moves down. This was from 48 down to 17. Wow. That is violent. And keep in mind, it did go from 68 down to. You see what I'm saying, guys? Oh my God, this is where I think we are. I mean, last bear market, we went from 68, 50% off, down to 30 something. That's the same where we are now. Then we had a little rally up near the pink. And I said, see how this is a shorting opportunity? Yeah, crossed over, whatever. Nothing's perfect. Okay. Smashed down. This next leg then went from 48 down to 17. That's like a 68% drop. That's where we could go. And then start going sideways. And even then, it popped up here, 25 down to 15. I mean, that's another huge drop. I mean, even if you got in around here, you sat through it, you still pretty close to the lows. You have to sit through it. But this is where I think we are. The next leg down is going to be pretty mild. And then October, December, bam. The other thing is people might say, well, look at this one. You touched the 200 here and it held, and then here was an overshoot and it held, and it was here we're close to. Isn't it just start dollar cost averaging? I guess so if that's what you want. But keep in mind that um, from December the 17 highs and then the 2021 highs, when it went from the highs down to the green, and it went from the highs here down to the purple, they went down percentage wise a lot more than we've currently went down, right? Here they went down from 20 to 3. So yeah, when you have a drop that's 80 something percent down, you know what I mean? I mean, yeah, that's maybe when you get to the 200, you're done. We're not near 80 to 90% down. We are at 52% down. Also, the timing of this was from December 25th, 17 to a year later. So you not only had a more magnificent magnitude of price drop, you also had a more expansive time cycle. So you had time on your side, you had a greater drop. So the odds increase that you will have a reversal at that level because price is now exhausted in both zoomed out time and price. Adding to that signal, let's go to the previous one. This is from the 22 November. All right, we got to 70 something and it went down to 15. But keep in mind, we're okay, 70 something and then hit the 200 and couldn't even hold. You know what I mean? But it still went down from 70 to 22, which is, a lot more than 70 to 35. 35 was around here. So why should this time be only 50% when all the other times were more? Why should this time be only the lows be in now when it's 6 months in instead of at least a year? Why should it go against that PPT Bitcoin time cycle chart, which I'll show you on the weekly now, on the non-index one? I replaced the ones with the hand cloned ones that I had made because I feel like this indicator one with the sine wave is more accurate. There was some they matched up perfectly until it got to this level, which was previously the December 7th one. There was something odd about it, the way that these crossed previously. So I just took those out, and it's going to be around late November, December now, early December. Just keep in mind it could be a week earlier based on the indicator. They matched up perfectly until then for some reason. So I'm just using this one now, which is drawn by an indicator, not the shapes that I've cloned by hand. And that matches up, like I said, with about a year from there into the fourth quarter, which matches up perfectly with the previous chart of what every other cycle is done. So, that's what we're up against. And, like I said, I would be much more confident to short if we were penetrating this as this rolls over into the 69, 70K area The cloud is the pink dashes, and the 20 moving average is the uh, yellow moving average. And like I said, just as an NLP for you, neuro linguistic programming, memorize the tagline. Every pull up in a bear market to the yellow 20 moving average is a shorting opportunity. I mean, you might say, well, here, Matt, it broke. Okay, fine. It did eventually break, but if you shorted it on first test, you made a huge amount of money. That's it. You don't want to short, go from 78 something down to 73 something. That's a good short. You have plenty of time to use a quad exit or go all out or whatever you wanted to do. Take profits and protect yourself. And then the idea failed and then it went up. Okay, you had it didn't break it until the following week. Now, like I said, it could fail without even touching it. Here it touched, here it touched, here it didn't touch. Maybe this one doesn't touch. Maybe that's the pattern. Touches, doesn't touch, touch, doesn't touch. Like I said, on the weekly, one thing that is a very bearish indicator is the inverse zero line reject from the previous week, which is now playing out. One indicator that's still bullish is that we're holding above or around the 200. I'm just giving you back. People say, "Oh, which way are you going?" I said, "I don't know. I'm giving you mixed signals because that's literally the facts on the charts. This is bearish. That's excuse me. That's bullish. This on the weekly is in. Um, I'm sorry. This is the weekly. We went into oversold. We've bounced. People say, "Oh, I think it's going to bounce and go sideways for a long time." I'll show you that on the monthly. But we may get the counter trend because blue has crossed over orange, and when blue crosses over orange, we've gone up. So the RSI is currently, at least in this phase, for what's happening in the next, couple of days to a week or so, is mixed because while this inverse zero line reject is bearish, this one is slightly bullish, and this one's kind of neutral because, like I said, the reversal happens every time when we penetrate or touch this pink trend line, which has acted as resistance every single time. Does that mean that it has to act as resistance this time? No, it could fail and break. But doing so would have, in my opinion, trend line implications big time, unless, of course, it overshoots, becomes a false breakout, and then we readjust the trend line. This is just what you have to do with trading. You have to be nimble in your thinking, and you have to be okay when you're proven wrong. You just have to set the rules, the regulations, and the parameters for when you are wrong. Because deep down, you have both the tools and the talent to get it done. I'm showing you this system firsthand. You're charting extraordinaire. You're guiding light in times of universal deceit and uncertainty. Your chart decoder, your portfolio protector. I'm here to help. Okay, moving on to the LLP. Like I said, I've readjusted this as a bear flag. This is a bull flag. But even a bull flag in a bear market is a bearish signal. I think what's going to happen, this is why I've been hesitant to short and give a lot of signals, even though we've been kind of pulling down. I think that we've broken above the cloud. We've bounced off this trend line. We're having some problems. Like I said, until this 50 is broken, and technically this trend line, and we get a balanced breakdown, we could penetrate higher and test this trend line. If we come up here and test the confluence of this trend line in the bull flag, I'm sorry, in the bear flag here, because it's sending. I've been saying it backwards. I'll fix that, but whatever. Tomatoes, tomatoes. We get what's going on. And it backtests this trend line, which has been held for the entire bear market, touched here and touched at the highs, and it's been, we're backtesting that. We're also backtesting the 2018 trend line. We're pulling up to them. Don't call these pullbacks. You buy pullbacks for continuations in bull markets and on trend up days, for day trading. And you short pull ups, not pullbacks, pull ups to trend lines and resistances acting, in bear markets and on trend down days. Okay. So just keep that in mind. They're pull ups. I think we can pull up to this trend line where this will be in a confluence with this. By the time we do that, This may have rolled over more into this area. This is the 100 moving average. I do not think we're breaking the 100. And at most, I do not think we're breaking the 200. I think we're going to fail there. And based on what Bitcoin has done at every single time in its history, every single time in history when it goes from its all-time highs and drops around 50 something percent, which it has, 52% every single time, the next leg down in an ABC, larger fractal Elliott wave down count is much more violent than what the first one is. I'm just warning you. So, like I said, well, this isn't a bad area. Eventually, you could say, "Oh, I'm DCAing." No, there's absolutely no evidence right now that the bottom is in based on what Bitcoin's done in the past. In fact, there's signals, like I said, are starting to turn bearish. They were at the beginning for a while, in the first couple of days of July, confirming the counter trend, and they all flipped bullish. Now the signals are all flipping back. No, I take it back. There's some are flipping bearish and some are remaining bullish. They're still mixed. And they should be because we're in a sideways market. This trend line ascending is still, we're making higher highs, higher lows. People say, oh, you're doing that, but in the context of this bear flag, but this bear flag is in the context of a bear market, which even bull flags, I said bear, I meant to say bull flag. This down one is the bull flag. They also fail. So keep that in mind as well. Now you can see on the 60, I didn't want to short this on first test. I talked about in the channel some of the aspects of what we can do as day traders. I said, the automatic short happens at the larger idea thesis when the cross of the 20 on the weekly happens with the cloud. If I'm day trading for scalps intraday, I need to see some sort of exhaustion, ideally on both sides. You see how this double bottom and then we pulled up was a buying tail at the zone? That's a form of exhaustion where if it comes near the zone again, or even if it pops up here, just throw it in and put a stop below the zone because you have an exhaustion edge. It's the facts of the charts. I'm just showing you. Look, straight up, selling tail down. I shorted that, or I shorted this one because there was a selling tail. I don't think I shorted this first one, but it was the second one. Actually, I have all the blue arrows. I didn't short that one. I don't know why I didn't. What day was that? Monday? Yeah. I think I said to myself, okay, I would short the second one, but I just wasn't there to do it. But that was at 9 a.m. I had a runner in at that point too. I think that was the other thing. Yeah, I mean, I've cashed out on my runner because I didn't see a strong edge in just holding one runner in a sideways market. I just, just cash in on the profits, what we done. This one was a little bit risky. I was basically using this relative momentum. But anytime you're shorting against a strong support zone into, actually, I didn't. The short was right here. It was basically like a weak sideways after a strong move down. I said, okay, well, maybe we'll have a trend line breakdown. At least I'll short this into this zone where I went all out or close to 75% off or something because, technically that's an area where, look, we could go long again. And we did. We had a buying tail. It was just kind of hard for me to flip my buys in real time. So I just held my 25%, got that 25%, stopped out a break even, but still made a little scalp on that. Didn't lose money. And then this was the next short, made a little scalp here, didn't lose money. This was FOMC, so I didn't short this one again. But it would have worked out for a scalp. You don't have to get every one of these moves. You got to think about risk reward. We want to basically get the best trade location plan. If the trade gets to the 20 in the cloud on the weekly near the 69.70 trend line zone when the hundreds rolling over, I'm going to short on full size and hold for a larger target with targets, to the bottom of the flag. That's how we're going to make the most amount of money. These scalps intraday where you're just day trading and you're not near a powerful zone, it's not a high edge idea. This, like I said, had risk. If I didn't have good exit skills, these would have been this would have been a loss. And if I didn't take profits there and kept holding, this would eventually probably maybe goes up and stops me out. But, I think the best one out of all these was this one here, this double top here. And then we, had a nice move down. It had the trend line confluence. This one was pretty good because this was a key area. We broke above it and then it formed like this false breakout. We got it right here and held it there. So as we get better and identify these channels, I will flip my very intraday and short-term bias to just be so neutral that I'm like fading support, shorting resistance and getting out and getting in and getting out and getting in. That's hard to do intraday, but it shouldn't be because a lot of the times markets are just sideways, and that's what we need to do. But we're catching some of it, and that's what's important. We're taking small risks to get these rewards here. Now, not trading is trading. It was very tempting just to, oh, I got a short somewhere in here. Yeah, and then, as that impulse came and I went for the mouse, I said, well, what's the system telling me? Calm down. The system is telling me that, at least today and timing wise, we went from here to here. That means that the bulls are in control of the day and doing so off the trend line. And if we just zoom out a bit, like I said, we have a bias from a rotational perspective to be sideways to up. Once we came down, touched the trend line, and had a pause candle reversal hammer, then even though it's been a grind, green, and now a higher close green. So yeah, it's inside. The bulls have been the more dominant ones. Doesn't mean you had to go long there. Like I said, if you're waiting to short on full size at the 20 in the cloud with me, then congratulations. You have patience. And like I said, it's coming up with this major trend line up here. Maybe this, this inverse head and shoulders doesn't have to play out like the Moon Boys think. When these start to roll over and we short it, they're going to be in shock that, I just don't understand how it's gone down only half of what it's ever done before, and the second leg's always been more violent. Now it's supposed to do something different. While we're having hawkish FOMC announcements, and we have, you know, war in Iran and so on, and possible sailor initiating a black swan like event, which would be our FTX counter signal to buy at the right time coming up. Um, we will be ready when that happens. Right? We do have this horizontal resistance zone. People say, well, how did you make that line? How did you know ahead of time? And you see how they start to work. Well, I mean, for one, this line was made ahead of time prior to even this day from here to here because we've had a strong launching point and directional conviction down. So, even ahead of time, when we came up here and formed a double top, and there wasn't really sustained momentum and strength, like, there wasn't just straight up moves. After we made this move here, we had that as an edge. And it's not just yet that day. If we go back in time, what was this zone? Held here, came pushed it up there, held here. And then once we broke it, kind of moved up here, broke around it, and then held his resistance again, moved down, came up close to it, big move down, moved down. So you can see this area is something that you shouldn't just not have on your chart. It's influenced behavior in a way. Holding here, it's not an automatic short because it's so powerful. I mean, these zones, the key swings, a zone from here to here, these are the zones that are much stronger from a horizontal perspective. But because we understand so many things about the market, we have to take into consideration other things. Like we have to get more advanced. We have to use trend lines as well as horizontal support resistance. We have to think about who's in control of the market from a multiple time frame perspective, like the short, the intermediate, the big picture bias. Take into consideration the volume on the day and what the pattern is, and who's the trend. I mean, there's a lot of things we're taking in, but this holistic approach has been calling it pretty well. You just have to become an executioner of it and have faith in it, and then you'll be able to see it. So bigger picture patterns as well has been added, and you can see this inverse head and shoulder has been the dominant force for the last month or so through the summer here, late June, now July being closely over with. And, will it resolve itself is the question here. Now, this is a much bigger pattern because it's an inverse head and shoulder spanning over a month than this one spanning 2 weeks, which is an intermediate term, bigger picture pattern. Well, since it's over a month, it qualifies as just a straight up bigger picture pattern. But it's not something we're not taking into consideration that we have here a proper head and shoulders. I represented that by this trend line here. So there was at least an intermediate term confluence of horizontal resistance and trend line resistance. I just am not a fan. And then, of course, you have the micro, bigger picture pattern here as well. I just wasn't a fan of shorting something, even though there's been sort of a trend, at least the last week or so, when we're not near an extreme. And if I am going to take a risk like that, like on these days, at least these days, in a day like this, has the selling tail, there's a buying tail, selling tail, selling tail, selling tail. And then you go short. You see that action reaction in real time, and it adds confidence. When you see an exhaustion into a zone, you have an edge from an execution point of view. We didn't have any exhaustion zone. So my thought was that when we came up here, that while we may get a bounce here, I just said it would just start to go sideways. So the risk to reward ratio wasn't in it for me. You see how I'm thinking about accuracy? Will this work out? Not will this work out now, but is this correct process? Is the reward to risk there? Where would I have to put my stop? The stop would have to be, technically behind the swing high or into this zone. And would we really reverse the day when we just launched straight up into it? No, we haven't. We've gone sideways. Markets go trend up and then they go sideways. They don't just always trend up and then just go straight down. So nothing wrong with decreasing our trade frequency and getting ready to unlaunch massive gains when we short the 20 and the cloud if we get there on the weekly, and then when we get possibly to the 300, and once we recover from the next violent leg down, um, and reload the entire portfolio into it. So, okay, guys, that's been about an hour. No one sent in any questions. No one posted any questions, and it's just me on the call. That's totally fine. Hopefully, this call was informative. I know a lot of people uh, in bear markets don't get as enthused or they're not as excited to study this on a daily, weekly basis. But keep in mind here, what we're doing now in preparation for when we reload our portfolio is how we really get the money. And that's what we want to be ready for. Fortunes are made in bear markets. When the bear market hits the golden pocket, get ready to unload because that's when the fortunes are made. So just remember that. All right, guys, over and out, and I'll see you in the room tomorrow. Take care.